We have with us Amarjyoti Barua, President and Group CFO of Mahindra Group in the studios. Mr. Barua, it's always good having you in the studios with us. And interestingly, quarter on quarter, you deliver more than the street has expected. Revenues have grown. Segment-wise, the auto segment has seen improved margins. And for your farm equipment sector, you've improved your guidance. So, I mean, those are three big, solid positives. But let's take them one at a time. Tell me about why and how has the quarter been good? Margins have improved. What's working for you? Because some of your peers seem to be struggling at this stage.
I think in general, the execution across all the segments has been very strong. Even in the first half, when the industry was up only 0.6% in farm, the farm segment has gained share. And it's done it without giving away price. So I think that strength of each of the segments where they are operating. Auto, of course, has been standout for most of the last year and this year as well. And then if you look at some of the other businesses, they've started firing as well. So both Mahindra Finance and TechM year over year did quite much better than what we had expected. Yeah. So I think that all of that has given a lot of momentum to the group.
Let's take it one at a time. And with the auto segment, of course, we'll take it farm and auto separately. Yeah. You did indicate that it's been looking good for the last few quarters. Now you've gone out and raised your guidance from 5 to 6 to 7%. What makes you so much more constructive now than you were, may say, previous quarter or previous few quarters? And do you feel the momentum of growth will continue because you've maintained guidance apart from on-farm equipment, which is an increase, everywhere else as well?
Yeah, so the big driver for farm always is monsoons reservoir. The MSPs have been quite supportive for farmers, and they've only continued to be supportive. So I think the two external factors which were the reason why we were guarded was seeing what the trend of monsoons is going to be and how the reservoir levels are going to be.
Fair for us to assume that second half of the year growth will be in the range of 13 to 14%, because if you've got to balance that out.
Yes.
Oh,
so that's the guidance we gave, 13 to 15%. Yes. Which is why, based on that 0.6% in the first half, we believe that 6 to 7% is where the industry is going to be.
And market share is at about, what, 42.5 in the second quarter? Do you expect that to move up as well and gradually go up?
So actually, October was really good for farm. It's taken up the share to above 43%.
Wow.
So I think what's going to happen is there is going to be more competitive intensity in the second half as people do come out of, now some of the traction is back in the market, so everybody's going to go more aggressive. We hope to maintain that share, but you know, there's always a little bit of plus and minus that will have to contend with.
Mr. Barua, congrats, of course, on a very good set of numbers. The question is two-pronged. One, a lot of notes seem to suggest that after a really long time, tractors are entering an up cycle, which could last between 12 to 18 months. Is your sense the same? Is that the typical length? And are we at the start of an up cycle?
So why we believe that last year was going to be tough is because the reservoir levels had dropped quite a bit. Now with the reservoir levels being high, and then also seeing some of the output come out in the mandis. We talked about it yesterday, 20% increase in October in mandi kind of inflows. That indicates that the farmer is feeling good about what's happening. And that's always, we've seen is a 12 to 18 month momentum. That's why we're feeling good that this should carry into F26.
So we are at the start, and it could last for at least 5 quarters, right?
Yes.
And this is great for M&M Financial too, because typically that tends to do well when the rural side is doing well.
That is correct.
Okay. That is correct. The second one that I have is, again, auto-based. Because farms are entering an upcycle, but you're doing very well on the PV side. Mm-hmm. Somehow the country is obsessed with SUVs. Even if cars are not doing well, SUVs are. Are you more confident on an upswing in farm equipment driving the growth for the next 4 quarters, or will PVs still hold, or in your case SUVs will still hold center stage?
I think both are going to be quite strong in our view, and the reason for that is the SUV story was all about production being a constraint. Now with that constraint out of the picture and us having 54,000 production capacity, we should be in a good spot for the second half as well, because we have very strong launches. You know, the Thar Rocks has done very well. The 3XO continues to do well, and then the 700 is back as well.
You look at
Well,
EVs too.
Well,
Right?
there is some stress in the Bolero market, for example, right? So it's not all roses.
well.
Yeah.
Then we'd have to worry.
No, I think the momentum of these four brands will carry, and Scorpio N has continued to be just such a strong
Star.
workhorse, right? So I think that's what gives us confidence that auto will also. But farm, of course, should be better than what it was last year, second half, right?
Also, let's talk about this rural-urban debate, right? And it's we've seen this across your sector, across consumption, FMCG. Rural is doing okay and giving the much-needed support to the consumption space as well, but urban has started faltering. Do you feel the same? Are you feeling the same heat where rural is picking up for reasons that you mentioned? Urban is still not at its best. And going into the second half of the year, how do you see the dynamic shape up?
See, we are still not seeing like a sustained downturn in urban, okay? We did see July and August being challenging.
But is that only because of the nature of the product?
I think it's more than that, because the festive won't have been good across the board if it was really,
So
if
was
urban was
festive
really.
amazing this quarter for you? Or there
Festive was actually
overstocking?
very strong for us, and as we understand, for the industry in general. And that should give some indication that July and August were an aberration. But even if it isn't, and even if there is an urban slowdown, I think we feel good that because the premium segment continues, and that's what we were talking about before, that the premium segment is still doing very well.
Spot.
And because we are positioned there, we believe that we are still in a good spot in the urban market.
Just a quick one. In fact, we've talked to a lot of players like yourself, and what we understood from them is that the festive season has also worked out because of those heavy discounts going out. Is that the case with you as well, or have you managed to sell at a good price without aggressively undercutting price?
We haven't given anything outside of the three-door for very different reason. The rocks became such a big hit that the three-door, of course, a lot of people who had purchased the three-door basically said, I want to wait for the five. So we had to, just for that. But other than that, no other models have we given any kind of major discounts during the festive. So it's actually been a good run without discounts.
Can I just squeeze in a question there? I mean,
yes.
And again, just trying to understand, I'm not asking you to comment on specific competitors, but we saw this happening wherein a new entrant priced their electric vehicle at circa 10 lakh rupees, and it forced an existing one which was priced much higher to cut down quite drastically on their numbers. Now, we're seeing the price war in electric SUVs, if you will, and available across price points. And if that continues when you make newer launches, will it force you to price your launches more competitively than you would have otherwise hoped for, and will there squeeze margins?
So I think in a mature segment, you could say that. In what is a market to be developed, I still believe strongly that you don't have to get into a price war to spur demand, right? I think it would indicate that your product, which we are hoping is differentiated, hasn't really hit the mark with the consumer more than price. Because most of the segments we are going to be entering on the EV side are not necessarily the price conscious consumer, right? It's really the premium segment. So there we are hoping it's all about features, it's about differentiated experience, it's not about price. And if we are having to fight on price, then we are doing something wrong in our positioning.
Right. Just talking about looking ahead and everything that is lined up for you and the company, and of course, as a Group CFO, this becomes even more pertaining. Higher launch and marketing expenses are anticipated in the coming up quarter. Could you share some details on what we should be expecting? How is that going to impact operational efficiency? Just give us a sense so we know what to expect going into the next half.
Sure. So the third quarter is where we've got both the ROCs and the EV launches all coming and those are big launches, right? The EVs are a global launch. Thar ROCs was a huge launch across the country. So those are expenses. Nothing out of the ordinary from what we have incurred with prior launches. So I would expect some bips of pressure on auto margins, but as I've said yesterday as well, it's going to be a temporary thing. It's not something that is a fundamental operating leverage, pressure.
Okay, just broadening the bucket a little bit. Now, you've been consistently talking about the, I'm forgetting the terminology, but the newer gems or the
Growth gems.
Yeah, growth gems, right? So growth gems is one aspect. TechM is doing what it is doing, and hopefully, if the US spend moves up, that spurs that too. I heard yesterday that you guys, I think Dr. Anisha was saying that the hotels business in the European side is probably encountering a bit of an issue, but otherwise most other things are doing okay.
Yes.
So what leads growth for the console entity? Is it tractors and PVs majorly because that's such a bulwark of your overall numbers, or some of the others also stand up and make their presence felt in the overall console numbers?
Okay. So we had 10% revenue growth in console. 15% of that was auto, 12% was services, and farm was flat. So it's actually services which has contributed as much as auto this past quarter, and we expect that to continue. And when you think about services, TechM is of course one factor, but Mahindra Finance also has grown revenue, and the growth gems collectively also have grown revenue. Within the growth gems, the logistics business and Accelo have been outliers. They've done really well year over year, and we expect that momentum will only carry forward to the other growth gems for the rest of the year. For example, in our aero business, we've had some big orders come in, and so we expect some growth towards the end of this year going into next year. So in general, the services part of our business is starting to fire in a meaningful way, which is what our strategy was aimed at.
Well, let's spend some time talking about Tech Mahindra, because I think it's been a good quarter. Most people have generally seemed quite impressed by how well it's worked out for the company. Margin expansion is currently underway. I mean, your target is what, 15% in FY27? Given what we've seen in the US only literally 48 hours ago, do you feel there's an upside risk to doing better than what was initially anticipated maybe a week ago? Because like we discussed, with Republican at the center, it's great for business. And you elaborated too on this, saying manufacturing, comms are sectors that may do well. What does that mean for TechM in the next 1 to 2 years?
So I hope it is upside for us. Yes, we would love it, because the business is heavily focused on operating efficiency right now. So revenue can only give us positive momentum, right, on the operating efficiency that comes in. If you look at where TechM is focused on today, BFSI and manufacturing are two big focus areas. We are already very strong in telecom. So hopefully, if telecom recovers, that can help us. But on BFSI, we've continued to see,
earnings have been
so it's really manufacturing that needs to fire in a meaningful way. Hopefully, with some of the focus that is going to be put in the US around manufacturing strength and getting competitiveness into the domestic industry, that should only mean more discretionary spend, which in turn should help IT services.
So have you gone back to the drawing room with your team and said, look, change of strategy. Now that the Republicans are there, maybe we want to reduce focus on BFSI. Maybe we want to not talk so much about cost optimization. We now talk discretionary. We now talk manufacturing. Is that what's happening, or it's all status quo as we see it?
No, because the way the business is organized is already organized by sectors. So it is very heavily focused on manufacturing today. So I think the idea here is going to be have enough people out there who are in touch with the customer, so when the spend happens, they are
So we know key beneficiary of Trump for the street potentially could be Tech Mahindra.
Well,
you know, we've been trying to find, in fact, Neeraj and we've been talking about this, we've been trying to, everyone says tech positive, but we don't really know what tech positive, right? So this is great perspective. It's manufacturing. Companies that have a big contribution coming from manufacturing stand to gain a little bit more than the ones that have BFSI.
And then we talked about energy when we were just talking before. Energy should also benefit, especially in the US, and that's a sector which has been languishing for some time now. So I think both of those should be net positive for the tech sector.
I have one final question, and that is on Capex per se, India Inc., if not just M&M. The government also in the first 6 months has spent subpar. Now, when does not sectoral private capex, but overall broad animal spirits in private capex come up? does the government still need to do the heavy lifting for the next few months in the global uncertain period, or would private capex come back? And what is M&M's thought on capacity expansion and capex money being put up?
See, we've said this. Private sector has to contribute to the nation's, to building the nation, and capex is a big part of it. And if we believe the India growth story, we have to invest today to capitalize on that. So that's why from a group standpoint, we have already earmarked significant spend over the next 2-3 years, and we'll only keep that going.
Is it starting though, Mr. Barua? Is the question, is this starting in a meaningful way, or will it start maybe with a 6-month lag? I mean, there could be idiosyncratic factors. In your case, utilizations may not be as high, what have you. So just trying to understand that.
From the group standpoint, it's already underway. If you look at our cash flow this time, you'll see our capex has almost doubled versus the same time last year, right? So I think we do believe that we are going to see capex increase, not just for our sector, but across.
So, Barua, just one final question here. We've already talked about everything that seems to be working for the group. Is there any vertical, any business that you're a little circumspect on as we go into the second half of the year?
I think we've got to do better internationally. That's been a drag on the farm sector for some time now. A lot of it was market, but some of it is also our own performance in certain markets, so we'll have to keep doing better there. That's one area that we are putting a lot of focus on in the second half.
So pick up on that would also mean just better numbers coming in from their stable.
Yeah. Well, it is a drag today, so yes, if we can fix some of it, then
back,
it should help. It should help.
Great.
Yes.
Mr. Barua, appreciate you being here, and to you and yours, a very great new Samvat.
Thank you so much.
Yeah,
Thanks for having me.
such a pleasure to talk to you. Thank you very much.
All right. Thank you.